Late 2022 has not been kind to the crypto space. The meltdown of the FTX exchange and the high-profile collapses of several currencies have many investors thinking twice about their positions in the sphere. FTX is a Bahama-based cryptocurrency exchange. It was founded in 2019 by Sam Bankman-Fried, or SBF, as he is known in the crypto world. The exchange grew rapidly and raised millions of dollars from venture capital funds. In July last year, it secured $900 million at a valuation of $18 billion. Months later, in October 2021, it was valued at $25 billion when it raised funding from Singapore state investment firm Temasek and US-based Target Global. And in January 2022, its valuation soared to $32 billion when it raised $400 million from Japan's SoftBank. Until July this year, FTX seems to be on a roll. It offered to buy bankrupt crypto ledger Voyager Digital and even got approval to operate its exchange in Dubai. Ultimately, though, reality hit home for FTX and its millions of users who saw billions of dollars vanished overnight. So what went wrong with FTX, and does it spell trouble for crypto's other trading platforms? It all started with a CoinDesk report which revealed that Alameda Research, the quant trading firm also run by Bankman-Fried, held a position worth $5 billion in FTT, the native token of FTX. The report revealed that Alameda's investment foundation was also in FTT, the token that its sister company had invented, not a fiat currency or other cryptocurrency. This promoted concern across the cryptocurrency industry regarding Bankman-Fried's company's undisclosed leverage and solvency. On 6th of November, Binance, the world's biggest crypto exchange, announced that it would sell its entire position of FTT tokens, roughly 23 million FTT tokens, worth about $529 million. Binance CEO Changpeng Zhao said the decision to liquidate the exchange's FTT position was based on risk management following the collapse of the Terra Luna crypto token earlier in 2022. By the next day, FTX was experiencing a liquidity crisis. Bankman-Fried attempted to reassure FTX investors that its assets were stable, but customers demanded withdrawals worth $6 billion in the days immediately following the CoinDesk report. Bankman-Fried researched for additional money from venture capitalists before turning to Binance. The value of FTT fell by 80% in 2 days. The promise of rescue was short-lived, as Binance backed out of the deal a day later. On 9th of November, the exchange said that it would cancel the FTX deal after corporate due diligence raised concerns about the mishandling of customers' funds, among other issues. On 10th of November, the Bahamas securities regulator froze the assets of FTX Digital Markets, FTX's Bahamian subsidiary, following news that Bankman-Fried was seeking up to $8 billion in capital to bail out the exchange. On the same day, the California Department of Financial Protection and Innovation announced that it had initiated an investigation of FTX. Bankman-Fried stepped down on 11th of November as CEO of FTX, replaced by Ray, who led energy trading firm Enron through bankruptcy proceedings years before. FTX filed for Chapter 11 bankruptcy protection the same day, revealing that roughly 130 other affiliated companies were also part of the proceedings. The bankruptcy filings indicated that FTX had assets in the range of $10 billion to $50 billion and liabilities in the range of $10 billion to $50 billion. Bankman-Fried was arrested on 13th of December by the Bahamas authorities after the U.S. government filed criminal charges to hold him to account. What is crypto contagion? How is spreading after FTX collapse? 2022 exposed a deep interconnectedness in the crypto ecosystem not seen in previous market cycles. companies engaged in risky lending practices, taking customer funds and investing them elsewhere in search of sky-high fields. They posted illiquid, volatile tokens as collateral. The result? Several high-profile collapses and a resulting contagion impacting a vast set of companies with the exposure to those failed firms. FTX is the most notable case so far. After FTX's insolvency, investors were left wondering which domino will fall next. One example was crypto lender BlockFi, which entered bankruptcy after revealing exposure to Bankman-Fried's empire. On 10th of November, Genesis Trading said on that its trading desk has $175 million in locked funds in its FTX trading account. The company later had to suspend withdrawals from its lending arms, citing unprecedented market turmoil. To counter the risk of contagion, investors began moving their assets away from exchanges. The number of bitcoins on exchanges fell from its peak of 3.1 million in 2020 to around 2.2 million at the end of 2022. Why are crypto exchanges reveal their proof of reserves? In a bid to restore investors' confidence in cryptocurrency, the idea of proof of reserves started becoming a big deal. Proof of reserves is seen as a way for exchanges to assure customers that they are in fine shape and won't meet the same fate as the defunct FTX. Recently, the following exchanges carried out proof of reserve audits: Huobi, Binance, Crypto.com, Deribit, KuCoin, OKX, Kraken, BitMax, CoinFloor, Gate.io, and HBDC. As it said, trust once lost is difficult to regain. The collapse of FTX, one of the world's largest cryptocurrency exchanges, and losses to the tune of billions of dollars have raised questions on the legitimacy of the crypto realm. The reliability of centralized exchanges, crypto wallets, and even well-known developers are hot topics of discussion among those with even the slightest knowledge of digital currencies. One way to bring further transparency and boost public confidence is regular publication of proof of reserves by crypto exchanges and other services providers. This is expected to demonstrate that these exchanges have the crypto assets they claim publicly. Establishing proof of reserves as the new benchmark for cryptos will likely aid the development of a more dependable and open ecosystem. So, what do you think? Will disclosing proof of reserve bring back trust to the crypto ecosystem? Let us know in the comments below.